Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, April 5th. Stocks on Wall Street are set to open lower as investors await data on the services sector and the minutes of the most recent Federal Reserve policy meeting. The NASDAQ composite may take a bigger hit than the other two major equity averages today. NASDAQ OMX Group said it will rebalance the NASDAQ 100, effective May 2nd. According to the Wall Street Journal, the move was driven partly by the rise in Apple shares, which have more than quadrupled in 2 years. The stock's weighting in the index is currently more than 20%. News of the rebalancing is sending Apple shares down nearly 2% ahead of the bell.
The technology industry is in focus for another reason as well. A big deal in the chip sector. Texas Instruments is buying National Semiconductor for $6.5 billion in cash. The price tag represents a 78% premium over National Semi's closing price on Monday, and those shares are jumping more than 70% this morning. The deal has investors speculating about more consolidation among chip makers. Analog devices and linear technology are both set to open higher, following upgrades from Auriga USA. And Kaufman Brothers resumed coverage on several semiconductor stocks. Texas Instruments, Intel, Qualcomm, RF Micro Devices, and Marvell Technology all got buy ratings.
In other M&A news, Procter & Gamble is combining its Pringles snack business with Diamond Foods in a deal worth about $2.4 billion. P&G will own 57% of the new company, with Diamond shareholders owning the remaining 43%. Diamond shares are gaining more than 3% on the news, and P&G shares are set to open slightly higher. Another stock to watch today is Expedia. It's jumping nearly 5% in the pre-market after the online travel booker agreed to resume doing business with American Airlines. Expedia had pulled the carrier's airfare and schedule information off its website in January as part of a dispute over commission fees and product control. Shares of KB Home may also be on the move. They're falling more than 5% right now after the home builder posted a bigger than expected quarterly loss on a 25% decline in revenue.
Turning overseas, Asian markets finished mixed as China's central bank raised interest rates by 1/4 percentage point. Japanese stocks fell on signs that the country's nuclear crisis could stretch out even further, and Japan's automakers are dealing with supply problems. The AP reported that Toyota will temporarily close its North American plants because it's having trouble sourcing parts from Japanese suppliers. And in Europe, the markets are broadly lower after another downgrade of Portugal's sovereign debt. Moody's Investors Service dropped its rating on Portuguese government bonds by 1 notch, following a 2-notch cut last month. The agency said it fears the country will have trouble meeting its deficit reduction goals and will likely be forced to seek a bailout. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.